Hello, I am Mariana, and I am thrilled to be here sharing with you my knowledge, my experience in these open banking initiatives. And first of all, to thank the organizers for having me here. This is a real honor. So I think that in order to understand the potential of open banking, we first need to understand where it comes from, how it emerged. So I'm going to share with you a few slides. Okay, so open banking is not a random idea that someone came up with and said we need to start sharing information. In the UK, back in 2014, the authorities ordered a study with regards to the status of competition in the banking sector, which, by the way, was at a very standstill point back then. And then it was published a Fingleton report, which concluded that more access to information had the potential to increase competition. Then in 2015, the Treasury ordered the establishment of the Open Banking Standards Working Group to explore how uh, how data could help consumers in their day-to-day financial transactions, such as paying and lending and borrowing and investing and saving and so on. Then in 2017, the Competition Markets Authority ordered the nine largest banks in the UK to implement open banking, which is the use of standardized APIs for sharing data related to financial products and consumers' transactions with their previous consent, and to share this with third parties, whether they are fintechs or technology developers, other corporations, etc. Then in 2018, it is the official launching of open banking in the UK. And at the same time, in the European Union, the second Payment Services Directive comes into force, which also mandates payment services providers, not only banks, to share information with third parties. Both schemes, the UK's and the EU schemes, have their differences. We will see a little bit later. And what happens in this side of the world? Well, in Mexico, it is enacted the fintech law, and it enables open finance. We'll see why open finance. So, what happened in 2020 in Latin America? In Mexico, two financial authorities, the Banking and Securities National Commission and the Central Bank, issued their first rules for open banking. And in Brazil, the Central Bank publishes their open banking regulation. So, is this the first time that this data sharing practice occurs, happens? And the answer is no. This data sharing practice has taken place for years. The most common practice is known as screen scraping, and this is a programming technique for extracting data from a website or a document in text, which implies that the consumer has to share their banking credentials with the third party so that their third party can have access to their banking platform to extract the information. So regulators around the world consider this to be a very risky practice, and they consider that APIs are a much more secure way to perform this activity. But what are APIs? Well, the Fingleton report recommended that banks use standard APIs to share information with third-party developers. Now, APIs is the acronym for Application Programming Interfaces, which are communication protocols or a set of rules that enable two different systems to talk to each other. So, also, the Fingleton report recommended the use of common standards that are basically technical standards that include data, architecture, security, and authentication standards, as well as consent and revoke mechanisms. Now, when we talk about data, this is an important point because data, the type of data that is shared with third parties around the world differs from one place to another. But we can mainly talk about three categories, which is open, aggregated, and transactional data. The first one, open data, is non-confidential information that is related to a product or service of a financial institution. So here we can mention, for example, a product is the credit card and all the features of that credit card, or a service is the ATM. So we would talk about the locations of the ATMs, the services that are offered in the ATMs, the commissions that are charged in the ATMs. So that's the sort of information that it's encompassed in open data. Aggregated data relates more to statistical information related to our products. So here we can use as an example the amount of credit that is being granted in a certain region of a country. All right, and finally, the transactional data. That information is related to the use of a product or service of a customer. It always has to be shared with the previous consent of the customer. And here we can use as an example the account balances of a product, of a customer, or the history of transactions of an account, in an account. Now, um, open banking has been already implemented in different countries, and the approaches for implementation differ. During our study, we have identified so far three different approaches for implementation or for data data sharing practices. The first approach is a mandatory approach, which means that an authority mandates an obligation to a certain type of institutions, right? So that is the case of the UK, of the EU, Australia, Mexico, and Brazil. So in all cases, an authority mandates financial institutions to share information. However, the scope of institutions that are mandated or are obliged to comply with open banking is different. While in the UK, Australia, and Brazil, this mandate applies for banks, in the EU, for example, it not only applies for banks, but for payment services providers. And in Mexico, actually, we refer to open finance, not open banking, because basically all financial services providers will be obliged to comply with open banking rules. Obviously, in every place, in every country, this is a big initiative. Uh, 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 um, this is a very large initiative that has to be that has to be careful in many aspects. So in every case, we see that is being implemented in phases, not all at once. The second approach is a more facilitative approach where authorities contribute to facilitate adoption, but however, adoption is voluntary, right? So, for example, this is the case of Hong Kong, which has already issued guidance for banks to develop and implement data sharing standards. And Singapore has the monetary authority, along with the banking association, they published an API playbook, which contains over 400 API standards with different functionalities, and that can be adopted by financial institutions. And lastly, there is this market approach where there is no authority intervention. I mean, this is the case of the United States, where data sharing applies. Basically, it is implemented by setting bilateral agreements between parties. There is no obligation, there are no standards. However, in this market, for example, we have seen that there are important efforts, industry efforts, to start generating a standard. And because obviously they have realized that standardization brings market efficiency, and and it eases adoption. So I think we will start seeing more standards in this country. So talking about the benefits, well, as we said, this emerged to this emergence of open banking was driven by the lack of of competition. Well, it's not really the lack, but a slow competition in the market. So this has the potential to obviously trigger new business models and to um, generate more personalization in products and services. And we all know now that due to the pandemic, we as consumers require more and more personalization. And this initiative has obviously that potential. Also, there will be a lot more information out there that will allow institutions to get to know better their customers, so that we will see an enhancement of fraud prevention and KYC processes. And also, while the user is the owner of their information. This is very important because we're seeing in for example in Australia that open banking is just one part of a larger initiative that has to do with the consumer data right, that states that the consumers own their data not only in banking but in other sectors such as telcos and energy. So consumers will have the right to share their information with the providers in different sectors of the economy that they believe that will offer them valuable solutions, right? So this is something new that is emerging and that is being widespread in the world. The idea that the users are the owners of the information. So, as well as there are benefits, the challenges that we have identified basically are, well, technically, data provider institutions will have to make efforts to centralize information, which is widespread across their legacy systems. So yes, this is a common challenge that will have to be faced by institutions. Also, institutions must have the appropriate technical skill staff, right? So we're talking about here technology, APIs, data sets, connections, integrations. So yes, it will have to be important. It is important to have the right skill staff. Well, delays due to bureaucratic authorization processes. Yeah, I mean, for open banking to achieve its potential, especially large institutions will have to speed up their authorization processes because this is evolving fast, and then they have to adapt to this new fast pace. This one, managers will need to change their mindset. I think this is the most important challenge. This is the biggest challenge because institutions are used to handle information as if it was theirs. And yes, they are the custodians of the information, and they have to be very thorough in taking care of the information, but they have to understand that the customers are the owners of that information, and they will decide who they want to give this information to, and the institutions will need to have in place the tools and the secure processes to share the information ordered by the customers. All right, so there will have to be an important change in the mindset of the top management in the financial institutions. Also, on the consumer side, also the adoption will be a challenge because consumers, we as consumers are used to, you know, take care of our information, who we give it to. We have to be very thorough with our privacy and all that. And this initiative comes to change these old habits that we have. And that is why the institutions need to give this peace of mind to consumers that the secure processes will be in place for them to be able to share information and have access to these new solutions that have the potential to bring them real benefits. Now, in 2019, the Bank for International Settlements published this report on open banking and application programming interfaces. And the observations, the summary observations I want to show you and I want to share with you. So, although there are different approaches to open banking, implementations are still in early stages, and it is not yet clear that open banking will detonate customer adoption and product development. Well, again, this was, and that is why I highlight in red, this was published in 2019. We are now in 2021. And I think that if we look into the UK case, I think this is not quite precise now, because the UK has seen a tremendous success in their implementation. And for example, to give you some figures, in 2018, when the open banking was launched officially, they had around 700,000 API calls per month when they initiated. And now in 2021, they have approximately 3 million API calls per month. So that can give us an idea of how successful this has been. And this success has led the authorities in the UK to see how they will broaden this initiative and how will they bring this initiative to other sectors of the economy, as it occurs in Australia, as mentioned before. So I think the adoption of customer has all this challenge of adoption has also been that it has not been it's been seen that it's not quite difficult, because there is the thought also that customers will share their information to the extent the benefit they will receive from the third party, right? And we can see that also. I mean, think of you. We all the time see new services that are offered to us in the internet, and like, for example, entertainment, food delivery, all that new solutions that are making our lives easier, right? So we are not very concerned about sharing our information, but we are more concerned about what is the benefit that I will get from those new solutions. All right. So data privacy laws lay the foundation that customers own their data and have the right to control it. Yes, it is important to have data privacy frameworks in place, because data has to be protected, and consumers need to have very clearly what they are sharing, to whom they are sharing, and why they are sharing. All right. So data privacy laws frameworks need to be in place. Open banking brings opportunities and benefits, but also challenges and risks, as we already saw before, especially because of the growing connectivity between the parties. Yeah, that's right. I mean, financial sectors have already been very safeguarded systems, and open banking implies the introduction of new players to the system and therefore more connectivity. So these are risks that will need to be mitigated. Traditional institutions have the challenge of adapting to new business models, facing greater competition that can be reflected in declining revenues. Yeah, I mean, and I see in the banking sector in Mexico, there is a lot of action of banks, a lot of interest if in knowing, in researching what are the new technologies, what are the new type of companies that are emerging, and how they can adapt, and how they can incorporate these new business models and these new technologies within their offer, right? So yes, traditional institutions need to wide open their eyes to see what is emerging and how they are going to evolve in these new trends. Third-party supervision will be challenging. Yes, this is also important. This is new for everyone, not only for institutions. This is only new for supervisors, so they will also have the challenge to first issue balanced regulations for not to stifle innovation, and also to have the right supervisory systems to ensure to have a safeguarded ecosystem. Assignment of responsibilities in the event of financial loss and correct data exchange or data loss. Yes, the new players, the new third parties that will be incorporated into the system will have the challenge, will be responsible as well of handling this information and providing these new services. What is being seen, for example, in many jurisdictions, is that these third parties, apart from having to comply with certain rules, they will have to come, for example, with insurance, right? Responsibility insurances that that will have to give that assurance to the customers that if something goes wrong, they will be compensated. Lack of common standards inhibits interoperability, and the development and maintenance of APIs requires specialization, as we mentioned before. And yes, for interoperability, definitely standards are the best way to achieve it. And lastly, traditional banking is evolving into open banking. And yes, this is, we can see that in a very few years, lots of countries have already make advances in their move towards open banking. And there is this platformable report which reports that in the last semester they identified 62 countries already making some kind of action with regards to open banking and data sharing, whether research or implementing or some kind of action. So yes, definitely, traditional banking is evolving to this initiative. So now that I have mentioned platformable, yes, some numbers according to the report, and here I leave you the source. There are 62 countries where open banking regulations have been introduced or are under discussion and in different implementation stages. So globally, 74% of bank platforms are using the Open API specification standard to describe their APIs, which is facilitating rapid adoption by third parties. All right. So we can see 74% of bank platforms are already using API specifications. All right. So that can give us an idea of how fast the adoption will occur. Also, 720 banking platforms that make APIs available, they have published 3,400 open banking APIs, which represents an annual growth rate of 367%, quick growth. This one is interesting. It caught my attention. It seems that in Europe, the larger banks are offering more diverse API products, while smaller banks are simply meeting PSD2 requirements. If this continues, larger banks will win the fintech partners, driving the smaller banks even smaller. This is important because not only large banks have to comply with this. And not only large banks need to see this as a threat, but all size of institutions need to understand that they have to move towards that. Sometimes smaller institutions, obviously they may have not the budgets that large institutions do and the capabilities and all that, but there are already in the market companies that are being introduced that are offering their services to address the problems that small companies may face. So all kinds of institutions, all sizes need to take this seriously and understand that the institution that does nothing about this will surely be left behind. All right, so as final thoughts, I want to tell you that regulation and standardization are recommended. The potential value of open banking will have gradual growth, and also just to let you know that it shouldn't be seen only as a compliance initiative. Open banking has to be seen beyond compliance, right, to achieve its potential. The best user experience will influence consumers, and open banking has all the potential to provide better experiences. The potential of open banking will be reached when thought beyond regulatory compliance, as mentioned, and collaboration is an essential factor for open banking to be developed. As mentioned before, this is a huge initiative. It has to be safeguarded. It has to be well implemented, and all the parties, whether in the public sector and private sector, need to cooperate to create robust and safe environments. And well, from my part, it's all. I hope I have been clear, and I am open to receive questions, and I'll try to answer you as fast as possible. And well, Brazil, I wish you the best of success in your open banking journey. You are working hard, and I'm sure you will have fantastic results. Thank you very much. Take care. Bye.